What's up, everybody? Alexander Fibonacci, the day trading champ, the shark of the markets, and today we have an awesome trading opportunity to present to you. And you might think I'm crazy at first, but you need to stay around, watch the whole video, and you'll know exactly why Zoom is such an incredible opportunity tomorrow and why you could possibly 5x your account with the right entries and exits, and maybe even more. But guys, let's get into it. So first off, Zoom shoots up pretty much 10% after earnings. And right now, I'm hoping that this thing keeps going higher, although it looks like it's going to stall out here. But you know what? You guys, before you go to bed, make sure you pray tonight that this thing keeps going higher, because that means you're going to be able to make more money tomorrow whenever you short it. So you're probably thinking, Alexander, you're an idiot. Zoom just quadrupled its last earnings. The earnings were so good, and Zoom, everybody needs it. The virus, everyone's staying home, and all that is true. The earnings are quadrupled. Everyone needs to stay home right now because of the virus. But guys, the reason this freaking stock quadrupled, tripled in price lately is because everyone knew how important this stock was. Everyone knew that it was going to be accelerated growth. Everyone knew it was going to have amazing earnings. So it's all priced in. Why do you think institutional investors, why do you think people probably like you are already buying into the stock? Because everyone knew that this thing was going to grow. And now we have earnings that are great, but everyone knew they were going to be so great. So this is just added price. All this price is already factored in here, and this thing's going to have to come back down to reality tomorrow. So that is exactly why this thing will not be able to sustain its level. And I'm going to get into the charts and also show you a few more examples that we know have a very high correlation to this trade. So Amazon releases earnings, and what does it do? Let me pull this up right now. Amazon shoots up 250 points, right? And then guess what? Drops off for the next 3 days. So we're noticing in these stocks that thrive off the market conditions, they do better when coronavirus is around. Their stock prices soar during the year, but after earnings, they take a hit. So it's called pop and drop after earnings. And we noticed this with Tesla as well. Okay, that's the stock split. Let me find when Tesla announced earnings. So we stock split, so this is actually 100 points here, even though it shows like about 30 here. So Tesla pops up 100 points. After that, we lose major. We lose pretty much double the gains. We actually convert into losses. And let's do just one more example. Guys, this is off the top of my head. I mean, we've just been paying attention to the charts, the patterns, the stocks that have been just doing bad after earnings. And look, Shopify also gets crushed after earnings. Pretty much drops way below where it started at earnings. And so pretty much we noticed this pattern, and we want these stocks to go higher, because the higher they go, the more they have room to come down. So Shopify obviously does way better with economic conditions right now. And this is just a few examples off the top of my head, but it's been pretty damn consistent throughout the earnings season. And I say Zoom, I think, is one of the last big hitters this year. So you're gonna want to take advantage of this tomorrow. This thing's gonna reverse back down. The thing, the earnings are already priced in. So you can get back in after this thing drops back down. Okay, if you want to be a long-term investor in Zoom, get back in later. But for the options traders tomorrow, this is gonna be freaking amazing. Your puts are gonna just get so much value in such a short amount of time, because this shit drops quick. So make sure you time your entries and exits right. You want to short any bounce you get, and you probably want to buy some right off the market open, just so you can secure position. It might bounce a little after the market open, but even when it bounces, that's when you actually want to buy more. Why? Because the puts are going to be cheaper, and the upside potential is way less than the downside potential. And we've already shown you how all these great stocks that thrive under these economic conditions actually reverse after earnings. So that's your play for tomorrow. Mix up the strikes, make sure you time your entries and exits, and short the bounces. This thing will end lower tomorrow. And guys, speaking of the entries and exits, this is one of those rare times where you can seriously get an out of the money put. Like a 340 right now, that's 40 points out of the money on a stock. That's a ridiculous amount. And you can be pretty damn confident with that strike, and you can make some ridiculous gains. Not 300%, you could be making 800% on a strike like that tomorrow. So the reason why you can be confident in that tomorrow is because we've seen with Tesla and Amazon they didn't just reverse for one day after earnings, guys. It was multiple. You see, Tesla was 2 days after earnings. It dropped down severely. And then Amazon, I believe it was 3 days. We'll check right now. 1, 2, and then 3 if you sell at the open. So, these stocks that are soaring during these conditions, they don't just reverse for just one day most of the time. A lot of times it's multiple. So you have a high probability that not only do we lose 40 points tomorrow, but maybe we lose another 20 the next day. So that's how you're going to make some crazy percentage returns if you trade it like that. So I'd recommend, setting a certain amount to trade intraday tomorrow, and then setting, like 1,000 or a certain amount into some crazy out of the monies, like, a 340. Or it just really depends where Zoom does end up opening at the market open. So, that's my advice. And on top of that, not only can you trade Zoom tomorrow, but if you want to trade something else, yeah, you could trade Amazon as well. Why? Because Amazon and Zoom are so highly correlated. We got these institutional investors that are buying Zoom, they're also buying Amazon. So they're going to react very similarly, I believe, tomorrow. So if you have the money to trade some Amazon options tomorrow, that could be a great play. And it's at an all-time high, guys. I mean, this thing has overshot so hard lately in this last week. The upside potential is way less right now. So this is one of those safer times to actually buy some puts. And I mean, you could make some ridiculous money tomorrow. So with that being said, I'm Alexander Fibonacci, the shark of trading, and I want to hear back from you after you make some crazy money tomorrow. So make sure you come back, leave me a comment, let me know what are you going to buy for yourself, or how much money of it are you going to save, and I'll be super excited to hear that. And make sure you subscribe so you also see more trading ideas like this. And we actually break down the reason and the process behind why these trades are going to move the direction they do. And we're not just going to tell you, hey, this thing's going to go down 10 points. We actually tell you the process so you can make these trades on your own eventually. I actually want to help you, So make sure you subscribe. And with that being said, I'll see you on the next video. Make those bank accounts great again.